a cash buyer came to a guy like me who's a motivated seller and said, hey, Richard, I see your house you got for sale here. I know what you're asking, but this is what I'm willing to give you cash. And guys, if it's a reasonable offer, I would take it. A lot of other sellers are in that same situation. Now you're looking at what? A $38,000 to $4,000 per month mortgage payment on a $400,000 loan, guys. That's incredibly expensive. And that's one of the reasons why mortgage applications are down and home sales are down. It just is too expensive for the average American to borrow money to buy a house in this high interest rate environment.
I recently came across this video discussing the potential for a mortgage collapse, and I have some thoughts I'd like to share with you all. So let's jump right into it.
If we look at mortgage applications year over year, they're down by 19%, guys. When we look at home sales over the last 5 years, they're down by 19%. In 2019, there were about 5.3 million homes sold in the United States. 2022, things started to decline. 5 million homes were sold. 2023, 4.3 million homes were sold. And in 2024, the prediction is only 3.7 million homes will be sold. Interest rates. The 30-year fixed rate mortgage rate today is 7.882%. Staggering. Last year in 2023, we even got as high as 8% for the 30-year fixed rate mortgage. Mortgage rates are the reason why mortgage applications are down by 19%. It's the reason why home sales over the last 5 years are down by 19%. Why then would I say that may not be a bad thing for investors?
The video highlights some alarming statistics regarding mortgage applications and home sales in the United States. With mortgage applications down by 19% year over year and home sales declining steadily over the past 5 years, it's clear that there are significant challenges facing the housing market. One of the main factors driving this downturn is the soaring interest rates, with the 30 years fixed rate mortgage currently standing at a staggering 7.8%. Such high rates are making it increasingly difficult for the average American to afford a home, resulting in decreased demand and sluggish sales.
Existing homeowners who potentially could put their home on the market, they're not putting their home on the market because they don't want to lose their very low fixed 30-year interest rate. If I'm a homeowner and I got a 3.25% 30-year fixed interest rate on my home that I'm living in, I may want to go and get a new home, but I'm not going to get a new home because I got to trade in my 3.25% interest rate. Plus, I probably bought my house pre-pandemic, so I bought it for really low. I got a lot of equity in it. I got to give up that, and now I got to go get a 7.8% interest rate, and I'm probably going to have to pay double what I paid pre-pandemic. So a lot of prospective sellers are sitting tight. They're not going to put their home on the market. That's hurting inventory as well. Now, mortgage loan applications are a big indicator of how the overall housing market is doing. And when you see mortgage applications down by 19% year over year, guys, that's not a good sign for the housing market. There are a lot of people out there that depend on the housing market to take care of themselves and their families. And I'm going to tell you right now, those folks are hurting because activity is still declining.
Now, while these trends may seem concerning at first glance, there's actually a silver lining for savvy investors. With cash in hand, investors have a unique opportunity to capitalize on the current market conditions. In a landscape where many prospective buyers are unable to secure financing due to high interest rates, cash buyers hold a distinct advantage. So if you have cash on hand, you want to invest, that's maybe the time. But naturally, do your own research. I'm not a real estate agent or financial advisor. I'm just sharing my opinion.
So if you're someone who has cash, you can now go to sellers and really negotiate hard for a good deal. Sellers are starting to get seller's fatigue. How do you know that, Richard? Because I'm a seller. I'm selling one of my homes right now here in Southwest Florida. It's been on the market almost 70 days. I've had a ton of activity, but no offers. My hunch is a lot of the people that are looking at that home are looking at it in anticipation of interest rates coming down. And they're saying, let's get out here and see what's on the market, but we're not going to buy. We're going to wait till interest rates come down.
For sellers experiencing fatigue from a lack of offers, cash offers can be incredibly appealing, providing an opportunity for investors to negotiate favorable deals. Additionally, the limited supply of inventory further strengthens the position of cash buyers, as sellers may be more willing to entertain lower offers in order to move their properties quickly.
The average home in the United States, guys, is about $460,000. Now, if you think about purchasing that home at $460,000, let's just say you had a lender that would be willing to allow you to only put $60,000 down, and they would finance $400,000 for you. But you had to take on a 7.5% interest rate or 7.8% interest rate. Your mortgage payment is going to be around $2,800 to $3,000 per month, guys. That's principal and interest. When you tack on insurance and taxes, that's another $1,000 to $1,200. If you got cash and you're in a position to buy a home and you're up against other prospective buyers, but they don't have cash, they got to go out and qualify for a mortgage in order to buy that home. It puts you in the catbird seat. You got cash. Most of these people who are around here looking at homes to purchase and got to go out and get a mortgage, a lot of those folks are going to be surprised. They're not going to qualify.
In my case, in 2020, I was looking for solutions to invest in real estate. But before involving myself in such an investment, I had to train myself. When I finished my degree in electrical engineering, I remember I said that I have learned to learn. Meaning my mindset was shift to understand that in life, we never have enough knowledge. In the real estate game, I wasn't understanding how the market works, for example. So I took real estate training, which blew my mind. Long story short, I went from a total newbie to someone able to build the network he needed in less than 2 weeks. I remember I went to the bank to see an advisor. She tried to sell me the regular options they invite people to choose. And I said, no, I'm here for this, and this. And she finally replied that I'm well informed on the subject, but she can't help me. I have to see her colleague who is more specialized on those topics I was talking about. I also realized how it's important to have cash on hand, especially around 2020. The market was crazy. By the time you made an offer, orders came with crazy order offers you can't afford. I quickly understood that to really take action, I need to invest time, effort, and money. And in many cases, real estate is a real long-term game. They call it generational wealth, right? That's generally the horizon. In today's world, we have many opportunities to generate multiple streams of passive income over the internet and even reinvest in real estate later. Based on the information I have today, honestly, that's my plan. I don't have any issue being patient. So coming back to today's situation, we see another trend. The high interest rates have deterred many potential buyers from making offers, leaving sellers in a difficult position. Imagine somebody in this situation facing a job loss. Can you visualize how many people are in danger right now? Share your thoughts in the comments below.
Interest rates could come down to as low as 6% by the springtime. They're thinking that the Federal Reserve will reduce short-term interest rates by June. And if that's true, there is a correlation between short-term interest rates and long-term interest rates, right? See, the Fed funds rate is tied to the 10-year Treasury bond rate. And then the 10-year Treasury bond rate is tied to what? Mortgage rates. So if the Fed funds rate comes down, then the 10-year Treasury bond rate will come down, and then ultimately mortgage rates follow. That's what a lot of people are counting on, and they believe it'll happen in the spring. So a lot of people that are coming through looking at my house that I got for sale right now are not real buyers yet. They really can't afford to buy with rates at 7.8%.
However, as the video suggests, there is hope on the horizon, with expectations on interest rates potentially decreasing in the coming months. There may be a resurgence in buyer activity, offering renewed opportunities for both buyers and sellers alike.
So if you want to buy real estate for income, 1 unit to 4 units, now is the right time, in my opinion, to go shopping if you got cash. If you don't have cash, then you need to wait. Just wait until rates come down. They will come down eventually. Don't know when they'll come down, but they will start coming down eventually as the Federal Reserve starts reducing short-term interest rates. But that won't be until around May or June, or maybe even later in 2024. So you may have to sit tight and wait.
So what does all this mean for investors and prospective home buyers? For those with cash on hand, now may be an opportune time to explore investment opportunities in real estate. By leveraging cash to negotiate favorable deals, investors can position themselves for long-term success in the housing market. For those unable to purchase immediately like me, it's essential to remain patient and monitor market developments closely. As interest rates fluctuate and buyer sentiment evolves, new opportunities may arise, presenting potential avenues for future investment. But remember, you have to be ready. So, while the prospect of a mortgage collapse may seem daunting, it's important to approach the situation with a strategic mindset. By staying informed, remaining patient, and leveraging available resources, investors can navigate the challenges of the current housing market and emerge stronger on the other side. Now, watch this video next to discover what to choose between real estate and affiliate marketing. You will discover the pros and cons of each model, and these will help you to make informed decisions about the one which is more profitable and favorable to generate more revenues today. Do you prefer tangible assets or digital ones? See you in the next one.